Hey, Ike here. Welcome back to Live Richly. And if you're new here, on this channel we talk about personal finance, economics, and financial tech. I aim to give you guys actionable free tips with each video that you can use to reach your goals and get ahead. So consider subscribing for new content dropped weekly, unless I don't delete within a few hours of posting. But we're not going to talk about last week's video. So this is another subscriber requested video. So please keep the questions coming and let's get into today's video. So do you know where your money is invested? I mean, how does your bank invest your savings? Or what companies is your super fund or retirement account invested in? Or if you own an index fund or a managed fund, how do they invest your money? Which companies do you own? I ask this because you might be a vegan or a vegetarian and your money is invested in companies that conduct animal testing. Remember the bushfires? Yeah, that feels like a lifetime ago. 2020 has been a trip. But something else to consider is climate change, which is a real issue. Like, how many of us are invested in companies that are contributing to climate change? Or you're all about diversity, equality, but you're invested in companies that aren't diverse at all. I mean, look at TPG and Hub24, two big ASX listed companies that didn't have women on their boards until like February of 2020. So we're not even gonna mention Westpac, but links in the description. My point is, how your money is invested matters. What type of a world are we building? So in this video, we're going to be talking about ethical investing, what ethical investing is, how do you do it. I'm going to profile 3 of the most popular ethical investments on the market, determine how they assess ethical investing. And as usual, I'm all about saving you guys time and money. There are timestamps in the timeline and in the description below. So please feel free to skip to the section that's the most relevant to you. But if you enjoyed the content, a like will be great. A subscription will be fantastic. I'm hoping to get to 100 subscribers for the end of the year. So let's get into today's video. Ethical investing is all the rage right now. And the reason it's blowing up is that more millennials and Gen Z investors want to know how their money is invested. And financial intermediaries see a market and they want to make money. So ethical investing differs from traditional investing in that companies are evaluated not only on their investment potential, but also on the environmental and social impact. So how do you determine if an investment is ethical? That's a big question. But we have a set of factors that companies are rated under to determine how ethical they are. So these factors are environmental, social, and governance, or ESG for short. So environmental factors, this is how a business impacts the environment. So you'd consider such factors as pollution, animal testing, clean energy, sustainability, climate change, etc., etc. Social factors, this is how a business impacts society. So you would consider human rights, socially undesirable goods such as tobacco and gambling, and exploitation of cheap labor in developing countries. Like, did you know that workers in Bangladesh are paid 50 cents per day to support the fast fashion industry? Governance factors, and this is behavior of management, how diverse the board is, accurate accounting, and like compensation for executives. And that's looking at your Australia Post. Historically, ethical investing has focused on the E part of ESG, with climate change being the main area of focus. Like, according to Google Trends, in ethical investing and climate change search spiked in Australia after the bushfires. But now investment products are starting to put more weight on the S and the G. Hence why you see more companies taking social positions, such as same-sex marriage or Black Lives Matter movement, right? Rating agencies will score most of the companies and provide an ESG score. And we're not gonna really dive deep into how you view the score. The different rating agencies rate the companies differently and they assess them. Their methodology is different. Just know there is an ESG score that determines how ethical a company is. And a free source for this information is Yahoo Finance under the sustainability option. I'm not sure how reliable this is for Australian companies, but I still haven't found another free option. But if you stick to this video, I found a good alternative to if you want to assess ETFs and managed funds and super funds. I just haven't found one for specific companies. Now that we know what an ESG score is, let's see how this is used to build an ethical portfolio. There are three ways that you can use an ESG score to do this. There's negative screening, positive screening, and impact investing. So negative screening is you screen out businesses that are not in line with your values, such as a weapons manufacturer or a mining company. The second option is positive screening. And positive screening identifies companies that are in line with your values, and you invest more in those businesses. So something like investing more money in renewable energy, if that's your thing. The third option is impact investing, where you would look for specific social or environmental issues and invest to make an impact and get a financial return. So something like a green bond, see definition somewhere on the screen. So now we know what ethical investing is, ESG scores are, and positive screening, negative screening, and impact investing. But you guys probably want to know, how do I invest ethically, right? You have three options. The first option is to buy the shares from an exchange individually. This is probably the most time-consuming option, but it's best suited if you're someone that wants a bespoke portfolio. And a perfect example for this will be, let's say, a vegan, for example. Building an ethical vegan portfolio is harder than it looks. So if you're someone that wants a tailored investment option, buying individual shares on the stock exchange is probably the best option for you. The second option is to invest in a fund manager. There are tons of fund managers that are investing ethically now. Read the PDS to see how they define ethical, because trust me, your definition of ethical and my definition of ethical probably not going to be the same thing. So that's another option. The third option, which I'm going to cover more in detail in this video, would be to buy an exchange traded fund or an ETF that invests ethically. And if you don't know what ETFs are, or managed funds, or index funds for that matter, I've made an explainer video. I'll link that in the description below, or I'll annotate on the screen here. Feel free to watch that video after this one, or else none of the stuff I'm saying now is going to make sense to you. So now let's profile the top 3 Australian listed ETFs. Let's see how they invest ethically. And from my non-Australian viewers, stick around. I could use the watch time, maybe. Thanks. Anyway, full disclosure, I am not invested in any of these, so please do your own research. This is not financial advice. And on a side note, one of the things I love about ETFs is the names they come up for this stuff. Just keep that in mind. So the first option is the Vanguard Ethically Conscious International Shares Exchange Traded Fund. That's a mouthful. The ticker code is VESG, invests only in international companies, so outside of Australia here. It has 1,561 holdings, so it's very diversified. It's the lowest fee option here, and the fee is 0.18%, which is $1.80 for every $1,000 that you have invested in it. The fund was started just last year, 2019, and has averaged a return of 9.33% since inception. All this information is up to date until the 30th of September this year, right? So how does it invest your money? Well, the investment approach is negative screening. So they screen out the companies that don't align with their values, and engagement with the companies to foster change. So this is one of the biggest drawbacks of this fund, and this will make more sense when I profile the other two ETFs. So this fund excludes fossil fuels, alcohol, tobacco, gambling, military weapons, civilian weapons, nuclear power, adult entertainment. So if all that stuff's not your bag, this is the ETF. So the second ETF is the Beta Shares Australian Sustainability Leaders Exchange Traded Fund. I mean, seriously, who names this stuff? I mean, the ticker code is FAIR, F-A-I-R, which is actually a pretty good ticker code if you ask me. This ETF has a focus on Australian companies only, and currently it invests in 180 companies, so it has a higher concentration than VESG. The fee is 0.49% or $4.90 for every $1,000, which is a bit expensive for an ETF, but that is the theme you're going to see going forward with more and more ethical ETFs. They are more expensive than your traditional funds. So the fund was started in 2017 and has had a return of 6.89%. And to be considered an ethical investment worthy of inclusion into FAIR, the company must be a sustainability leader, right? And the investment approach is negative screening and positive screening. So they invest more in companies that are in line with their values. So FAIR aims to track the performance of an index of Australian companies that have been screened with the preference for sustainable businesses, and to avoid companies that are engaged in activities that are inconsistent to ethical investing. And this is actually an interesting point of differentiation between the two that came up when I was having a conversation with one of my friends, where VESG doesn't really have a focus on climate change. I mean, I know one is got an international focus, one of them has got a domestic focus. But just something to keep in mind, if you are someone that is looking at investing in VESG and your main focus, and that's something to consider, if you're someone who wants to invest in VESG and your whole reason for doing it was climate change, they don't really have a focus on climate change. And there are other products out there that focus on climate change. I mean, I'm not saying they're not ethical, it's just something to consider if your main decision was to invest in them for climate change reasons. They don't really have that focus. And back to FAIR, the ETF fully screens out for alcohol, animal cruelty, armaments, gambling, human and labor right violations, logging, nuclear power, pornography, and tobacco. The third option is the Beta Shares Global Sustainability Leaders Exchange Traded Funds, ticker code ETHI, or ETHI for short. So this is an interesting one because a company needs to be considered a climate change leader to be included in ETHI. So companies that are climate change leaders are defined as having a carbon impact which is at least 60% less than the average carbon impact for that industry. So more than 75% of the companies held in ETHI are based in the US, and information technology and healthcare make up more than 50% of their asset allocation. So this explains why this fund has performed as well as it has compared to the other two. It has a very heavy focus on technology companies. ETHI is the most expensive ETF with a fee of 0.59 or $5.90 for every $1,000 invested. So I'll list all of ETHI's exclusions on the screen. Pretty sure you guys are tired of me reading them out to you, but they clearly have a strong focus on climate change, and the performance to date has been pretty good at 20.89%. But it should be noted that the index that they track has returned 21.37. So over the same period, they have underperformed their benchmarks. So that's something to consider. So for the tips of this video, I've actually got two this week. Responsiblereturns.com.au is a site that is run by an independent body that rates investment funds and superannuation funds on how they're invested and which sectors they're exposed to. So just because a fund has the word ethical, green, sustainable, doesn't mean they share the same values that you do, and everybody's definition of ethical is different, especially in finance. And there's a lot of greenwashing in ethical investment in particular. So this website will help you eliminate some of that. And just note that funds have to volunteer to be reviewed and rated on this platform. So your particular superannuation fund or investment fund might not be there, but I think it's actually really good if you're looking to roll over your superannuation and you're weighing up an ethical option. This is a good place to start your research. Again, not your financial advisor, do your own research, but this is a tool that you can use to do that. The second tip is marketforces.org.au, which can show you how your bank is invested and if they invested in fossil fuels. And it will also provide you a list of clean banks. So if you're not happy with your current provider and you're looking to look for a cleaner, more ethical bank, this could be an option for you. So give them a look, and then really good resource if you want additional information on ethical investing. So in conclusion, early signs show that you can get a suitable return investing ethically, and research suggests that companies that invest ethically do perform better in the long run because they're better corporate citizens and they're probably not being fined billions of dollars every year. The ETFs I've listed in this video have only been trading for 3 years. There are more options available in the US. So let me know in the comments below if you'd be interested in a video on ETFs that are listed in America. We're able to invest in them here. If you get one thing from this video, get these 2 things. Number 1, how you invest your money matters. You can make a bigger difference in this world with how you invest your money than if you use a keep cup, if you recycle, or you're attending as many climate change rallies as you want. Your investments, how you invest your money, makes a big difference. And the second thing is find out what you're passionate about or what issue you're passionate about and focus on that one thing. You're not gonna find a lot of investments that are gonna cover everything, but it's better than nothing. Right, so this has been a long video. The edit is gonna be fun. And if you stayed till the very end, thank you for spending your time with me. A like on this video if you learned something, and a sub to the channel if you aren't a subscriber would be great. Consider sharing this video with someone who you think might get value from it. And in closing, as always, remember to take care of yourselves, take care of each other. Don't forget to call your mom. And until next week, peace. I'm out.